30-year mortgages, we're like at what, 3, 4, 5 right now. Scarlett and I, we were just talking about refinancing the Bloomberg Beach House. Is this going to be a real concern here for mortgage investors? I mean, is there sort of a real appetite now out there for folks to sort of refinance?
Well, we haven't seen it yet. The January report was down 13% month over month. It's a confluence of the seasonals and a lower day count. But one of the fun things about managing mortgage-backed securities, well, fun's too strong a word. One of the interesting things about managing mortgage-backed securities is the question is not if you'll get your money back, but when you're going to get your money back. So trying to accurately predict your flow of prepayments, because the underlying mortgagees can prepay at any time without penalty, that's key to your performance. And right now, one of the unfortunate effects of the coronavirus, among many others, is interest rates have collapsed over the past couple of months. So because interest rates have collapsed, mortgage interest rates have collapsed as well, and that can be a headwind going forward for the sector because of faster than expected prepayments.
Okay, so let's just take a step back for a moment. When interest rates collapse and mortgage rates come down, it's great news for homeowners who want to refinance, but maybe not so great for these mortgage-backed securities investors who then see some of their payment schedules shifting.
Well, that is correct. And you have to remember also that a U.S. homeowner can prepay at par at any time. You're getting back at 100 cents on a dollar what you paid for a premium. And the entire 30-year mortgage stack, for example, is all trading at a premium right now. So when you buy a mortgage, you try to calculate what your future prepayment speeds will be. If you paid a premium, they come in faster, that can hurt performance, and that's a possibility going forward over the next few months, because I don't think anyone predicted what would happen with the coronavirus.
So, I mean, this is all well and good, but I mean, there's an argument here too that, I mean, mortgage rates have been low for a while. I mean, we've averaged basically below 4% now for, I don't know, a few years. So I guess I feel like a lot of people who maybe would want to refinance, maybe they got in at 4% and they're looking now at 3, 4, 5, and they're thinking, it's not really worth me refinancing for that.
It's a lot of paperwork.
Does that factor into this?
Well, it's not so much paperwork anymore. The things have changed in the mortgage sector, and one of the most interesting things is the rise of tech and the non-bank services. The non-bank services, they're smaller, they're very nimble, highly aggressive, and they're very tech savvy. It used to be if you wanted to refinance a mortgage or even take out a mortgage, it was going back and forth to the bank, to the broker, using all that paperwork. Today, you can sit at home in the middle of the night, tap on your phone, and within minutes have an answer whether or not you can refinance. So the incentive to do so is increased for homeowners because it's much easier than it used to be.